Hello, everyone. Dave and Tom Moore, the Exchange Bros.
Good morning.
Good to have you here again.
Good to be here.
Sort of hard to get us both in the same room at the same time for very long, but we make it happen. So, hey, we've been getting a lot of questions, actually a lot of different issues with respect to holding periods and dealer status. And we had an office meeting yesterday, and several of our coordinators were discussing this topic. So I thought it'd be a good idea to sort of go over the Klarkowski Court Case from the 60s. If you are friends of our channel, you've probably seen me talk about this in the past. Tom and I use this court case when we are looking at 1031 for whether a property qualifies, whether it's held for resale or investment. 9 points used to determine dealer status. We also use this court case when we're sort of looking at our retirement accounts and looking at something called unrelated business taxable income. And what we're talking about in that context is an IRA or 401k plan. Even a Roth IRA could have tax exposure in a transaction where they're holding a property for resale, where if the property is held for investment, it's going to be either totally tax-free with a Roth or tax-deferred with traditional money. But it's just something to think about. And I think this topic keeps coming up with hold periods, and we always like to say there really isn't one, except if you and I are swapping properties, which maybe we talk about related parties too. But let me just hit these 9 points real quick, and then I'm going to let Tom talk, and I'll sit here and be quiet. You guys will probably be happy to have me do that. But anyway, purpose for which the property is acquired. 2, the purpose for which the property is subsequently held. 3, the extent of improvements made. 4, the frequency, number, and continuity of sales. 5, the extent and nature of transaction in the property. 6, the general business activities of the taxpayer. 7, the extent of advertising and promotion of the property for sale. 8, whether the property is listed with a real estate broker or other outlets. And 9, the purpose for which the property was held at the time of sale as opposed to the time of acquisition. So I don't know if you've got any comments immediately, Tom, but I guess we could go over some of these one by one too, and maybe sort of give your feeling on application of 1031 with respect to this, and people fitting 1 or 2 or how many strikes against them can qualify, and so on and so forth.
And I don't know that there's any one of those that might put somebody in a certain category. It's just those are 9 points that are looked at in aggregate to kind of determine whether or not somebody is going to fall into that dealer status or property held for resale. And the holding period comes up quite a bit. People will call us up and we hear all kinds of different holding periods that have been quoted to them by various professionals and non-professionals. They say, well, I've held the property for the required 4 years or 2 years or 5 years. They say all these things and we'll have to go back and tell them, well, there really isn't a required hold period unless it was something that, as you mentioned, was acquired from a related party. Or there are a couple of other instances where there's a recommended hold if it might have been like a second home or a vacation home. Then there's a revenue procedure that recommends a couple year hold period for the safe harbor status. So those 9 points, again, they're something that they should be looked at really in aggregate and are going to be factors that are going to help people to determine whether or not they're going to qualify. I had a gentleman yesterday that called up, and we've done a lot of transactions with them in the past, and they were a little bit concerned about the frequency of a certain sale coming up, and were asking me, well, how long, at what point does this cross a threshold? And said, well, best thing to do is take this case, probably run it by your tax people. A lot of it is really supposed to be intent. What was their intention when they bought the property? And that can certainly change over time. But take this information, run it by their tax and legal people, and come up with a plan. And maybe if they are not comfortable with a sale coming up in this tax year, maybe they'll be advised to put it off to a different tax year. When did they acquire the property? So again, all these things I think it's still it's a good list of questions to ask one, even though it's
good
been
framework to work with.
Yeah, it really is. I think that if people look through those and they really honestly answer these questions, and they can have a pretty conservative transaction.
So we'll just look at number one. Let's say the purpose for which the property is acquired. So if somebody comes into us and they sort of allude to the fact they're just going to sort of buy something and sort of fix it and turn it again, and maybe they've given up a property that truly has been held for investment, they're really sort of in a situation where they could be converting long-term capital gain the exchange could be counterproductive, I guess what I'm saying. They could be converting a long-term capital gain on this disposition, buying something they're going to hold for resale. Now they've got a situation where not only doesn't not qualify for 1031, but it's going to have a different tax consequence on disposition.
Yep, much higher tax brackets. Yep.
So what about and I think you were talking about some of this stuff yesterday too. The purpose for which the property was subsequently held. I mean, we're looking at what they're doing with this thing while they're holding this thing, and I think you just commented it could change.
Yeah, certainly can change. Maybe somebody bought a piece of property that's bare land, and they just were holding it for quite a number of years. Maybe it's even been in the family, and there might be a transfer to a new party, and they decide, well, let's develop this property and we'll divide it into a bunch of properties and build them out and sell them, and these things in and of themselves might be fine to do, but if you've got somebody that is suddenly going to really kind of jump into that dealer status or developer status with these properties and have multiple sale transactions. It's one thing if they divide a piece of property and then maybe they sell off all the properties to one buyer versus dividing them all, building them out, selling them as they're being built out. So they're all things that need to be looked at.
So I think probably about 20 years ago, we had somebody, a gal that was working with some property for her parents, and she originally contacted the family, had owned the land for, let's say 10 years, 20 years, I can't remember, it was a long time. And they had, let's say it was worth $2 million, but then she talked to some developer that said, well, hey, if we break it up into lots, it's going to be worth $3 million. But at the $2 million price, she could sell it, and if she sold it, look at long-term capital gains, or she could do the exchange. And it seems to me, and those numbers obviously could be wrong, but you factor in the cost of doing it all. But I think ultimately she was looking at a situation where even though the property would be worth a lot more with that conversion and breaking it up, it would trigger that switch that you're talking about, during that subsequent hold period. So even though it had been held for investment a long time, that change in nature and then selling piece by piece to other people, now she's a dealer, so can't do an exchange and went from long-term capital gain to normal income tax.
Yeah, and even on that, there really is. We've had many conversations with attorneys on, well, how many properties can I divide it into? How many sales can I have, or can I have within a certain time period? And there really isn't a good, solid answer for any of this stuff. And that's why, again, you'd probably want to look at all these different factors, all these different questions when you decide, or when that decision's made as to, okay, yeah, my normal business is I'm a doctor, and I've got this piece of property over here, and I want to divide it up into 8 different lots and sell them. Is that going to make me a developer, or put me into a different category?
So that sort of falls into number 6, the general business activities of the taxpayer. If you're a developer doing it, it's going to be different than some doctor dabbling in it.
Yeah, and so with the help of their tax and legal people, maybe they decide, well, okay, let's do the division, but let's just sell off a couple lots this year, and we'll hang on to the others, and maybe we'll build a rental property on 2 of them and keep those and sell the rest of them. So the intent, is to hold part of the property still, and I think all that stuff is going to play into the ultimate decision as to what category I'm going to fall into. Can I do an exchange or not?
So there was a proposal. We were watching the election this last fall, obviously, because there's a proposal to cap your max deferral annually for 1031. And there's also been bills proposed through the years that would cap the number of transactions you could do. But you made a comment, actually two. One, to buy the dirt, plat it out, and then sell it all to one person is going to be looked at differently than buying it, platting it out, selling off piece by piece. Right. And
Yeah. Yeah, and I think that might come to the frequency of sales and
so number
so
four
forth.
is frequency, number, and continuity of sales. Yeah. So we've talked about extent nature of transaction in the property, extent of advertising promotion for sale. So what happens there? What happens to a situation where, let's say, I buy something and maybe I've done some work on it, and maybe the work took 2 or 3 years, and upon completion of my work, I put it on the market. Does that qualify versus somebody, let's say you buy a property and you get a great deal on it, next door neighbor comes knocking on the door unsolicited, makes you an offer that's too good to pass up? What do those two things look like?
Well, that time period again is not supposed to matter, and we've had that situation quite a few times over the. I've been doing it long enough. We've had. In different markets, people might go out and buy a property, and they fully intend to keep it as a rental property or some sort of investment property. And a month later, somebody knocks on their door and offers them X amount more than what they paid for it. In that case, that investment has met its investment potential for that investor far ahead of schedule, and it makes sense for them to sell again. And that's really the reason why there is no holding period requirement for this, is that needs are going to change for different investors. The market changes for people. Then there's all sorts of different reasons why people might sell ahead of what they initially had planned. Now that investor that goes out and buys that property, and the sole intention is to fix it up and sell it, that intention really never changed. If it takes 2 or 3 years before they ever do get it built up and sold, sure, I'm sure that probably helps out their situation. But bottom line is that was always their intention. And if the IRS did audit that transaction, I think they're certainly probably at more risk than that person that sold it in a month. Yeah. And we also had, we talked about this yesterday, we had a client, and this comes up quite a bit, where client calls in and they they had just bought a piece of property, and maybe they had exchanged into this property, and we get a call back a couple months later, and they're selling that property, and we say, okay, we saw that you just acquired it. And it's not our place to determine whether or not it qualifies, but we're going to always bring up the questions, and so yeah, this person's selling again, and so we ask them, well, it looks like you just acquired it through the exchange. What are you doing? Did it not work out the way you wanted? What's happening? He said, no, I just I was always intended to sell it. I just was making money on the deal, and so we put it back on the market. And we said, well, it needs to be an investment property for you, not something that's held for resale. And well, it was my investment. That's how I make money. I'm investing in the property. I turn around and sell it, and that's all well and good. But in the eyes of the IRS, it's if that were the case, then everybody that was a developer could basically have tax-free income on their business. So it does matter that your intention is to hang on to it, and possibly to rent it out, although it's not necessarily required to be income producing. If they've bought a property and they've fixed it up, definitely a good idea. Put it on the market for rent. Try to get a renter in there. Rent it out for a period of time before you ever list it for sale again.
Yeah, so number 8 is whether the property is listed with real estate broker or other outlets, and number 9 you just sort of broached too, the purpose for which the property is held at time of sale as opposed to the time of acquisition. So, I mean, you think about when COVID hit, we had people that had bought properties, and all of a sudden, different governors were saying, well, hey, the tenants don't have to pay. And now our clients couldn't afford to keep the things because the banks are still wanting to get paid. And so that we've had people through the years with illness, obviously, too.
Yep.
Different things come
lots,
up.
Yeah, lots changed in that period
Job
of time.
changes.
Job changes. Yeah, like you said, maybe health reasons. So there was a lot of properties that may have been acquired for a certain intent initially, and things change. And there certainly is no problem in conversions of properties from one category to the next. People bought properties through exchange transactions and fully intended to keep them, and then COVID hits, things change. They either put them back on the market because they don't have income off it and need to move it to some different area or a different type of income producing property for them if they do need income, or maybe it's a quick conversion to a personal residence even. So lots changed.
And that could happen through that resale court cases where a property was acquired via 1031, converted to a primary residence after 4 months, and it was defended in court after 4-month hold, and they argued hardship in that situation. So really, you've got a series. I really like the 9 points in here. I think it's a good framework, as we talked about, to work within. If you've got a couple strikes against you, it's probably not going to be an issue. More often than not, I think Tom's got to look at the deals he's worked with the last few days, and probably you got 9 strikes against him in a couple of those situations or close to them. But the other thing is, I guess the other point is that let's say 1031 applies to what a property is at the time of disposition or acquisition if it's via the exchange, where Section 121 universal exclusion applies to anything that fits a 2 out of 5. So really, you need to talk. Good tax people are critical in these situations.
Yeah, for sure, and that's why we'll give them this information. The information's on our video channel, of course. This will be up, but yeah, we give this information to your tax and legal people, and then you can make a good, educated decision on which way you're going.
Please, please, please don't just shoot us an email or try to text us on this stuff. Give us a call. We'll go through the stuff, try to reason out your situation, and understand that there's just not black and white answers in a lot of this stuff. So if you're going to, it's really frustrating. I know we've both been AI coming on. Everybody, well, AI said do this or do that. AI's got no context on anything. So it's just, I think it's given us both headaches these days more than any.
Well, where's it getting the information from? So.
Yeah, definitely. So if you've got further questions on determining dealer status, please don't hesitate to reach out and give us a call. Dave and Tom Moore, the Exchange Brothers, 1031exchange.com. Thank you.
Thank you.